Hey everybody, Scott Riley, the Market Update Desk, July 12th. We made it to Friday. It's been kind of a wild ride this week. Started off a little bit negative at the beginning of the week after the previous week's positive jobs report. Um, we got through yesterday with a better than expected CPI results. Now we hit the PPI or wholesale inflation numbers. We also this week kicked off the latest edition of earnings season on Wall Street. Starts with the big banks and financial institutions. I tell you, it's time's going so fast. Every time I look, it starts to be earnings season again. Let's go through what's happening today. And we started out in the negative. Now we're in the green. So we're having maybe a good runway into the weekend here. So following yesterday's softer than expected consumer inflation index, we heard from many Fed members who seem to be even more in favor of a rate cut. Number one, we had honestly probably the best one out there, Austin Goolsbee, citing very logical information of what we're seeing about why we need to be proactive on rate cuts. Now, he's not a voting member this year, but he's actually going to have one vote in the July meeting. Now, he gets it in calling for rate cuts. The quote he had was the committee put out a statement saying we would not anticipate cutting rates until we were more convinced on a path to 2% inflation. And in his view, this is what that path looks like to 2%, what we're sitting at right now. He went on to say that the shelter reading, now keep in mind that's what we talked about really benefiting us in the CPI yesterday, is profoundly encouraging. We're starting to see that catch up of rent renewals and the downward pressure that it gives us in inflation. We also heard from San Francisco Fed President Mary Daly said that given the recent data on employment and inflation, those two big things we talked about, some adjustment to interest rate is warranted. It's very, very positive. One of the newer Fed members, St. Louis Fed President Alberto Musalem, said that while recent progress on inflation is encouraging, there needs to be more evidence before cutting. Now, this really kind of gives us the first insight into his thought process. Seems like he's going to be more on the hawkish side, and maybe it's because he's the new kid on the block. He's coming out more to the conservative aspect of that. Bottom line, the next Fed meeting, which happens to be July 31st, while the market is not pricing in a rate cut, there are two key points that are going to be released ahead of that meeting that very potentially could pressure the Fed. Now, one of those is going to be July 21st. That's the QCEW, quarterly census on earnings and wages. They'll release their full figures for 2023 Q4 job growth. Now, the QCEW is the actual data, not the imputed data from what we see each month from BLS. And the early estimates from the Philly Fed shows that they believe the BLS overestimated jobs, this is shocking, by 521,000 jobs in Q4 alone. So the Philly Fed is anticipating that the BLS overstated by approximately 173,000 jobs a month for Q4. That's a massive overstatement, and it just shows that this imputed data is not anywhere near reality. Additionally, July 26th, it's going to be the Fed's favorite measure of inflation. The PCE report is going to be released. Now, after the CPI report, which was cooler, the estimates have been moved lower to a 0% reading on core, which would bring the year-over-year figure from 2.6 to 2.4. It's getting very close to the Fed's target of 2%. If we see huge revisions to the Q4 job growth and a 2.4% core reading, there's a chance the Fed could cut at that July 31st meeting, although it's not likely. Now, the market is anticipating now a 100% chance of a rate cut at the September 18th meeting. Now, the question that we're looking at, is it going to be a quarter point or a half point? If we get these two things going on with PCE and CPI, along with giant revisions in the BLS and less job growth, they're going to probably be pressured to look at a bigger rate cut versus a smaller rate cut. Now, today we did get the wholesale side of inflation, the PPI report. Now, that rose 0.2 in June, which was much hotter than expected at the 0.1. Additionally, the May was revised higher from a negative 0.2% to flat 0%. So big revisions. Year over year, producer price index rose upwardly from 2.4 to 2.6%, hotter than what the market forecasted at 2.3. Originally, the year over year PPI was 2.2% in the previous report before those revisions. Now, the core, which strips out the volatile food and energy, rose 0.4. Now, this was double the expected of 0.2. Now, in addition, the previous months was also revised higher from flat 0% to 0.3. Year over year, the core PPI rose from 2.6 to 3%. That's a really big increase in wholesale inflation, much hotter than the expected 2.5%. Year over year, the core PPI was 2.3% in the previous report. So all these revisions upwardly are definitely a surprise. This report, though, did not really move the market. And that's important because now what's concerning is several of those points within the PPI do flow through to the PCE report. So we're a little bit concerned with what that PCE report could bring next month. Additionally, the University of Michigan Consumer Confidence came out today, and that report showed less consumer confidence than what was expected. So both in expectation of inflation, wages, job growth, and the economy across the board, less than expected. Yesterday's 30-year bond auction was graded a D-. That's why we didn't get really as much juice from the CPI report as what we would have thought with those numbers that came out. Next week, Monday's the big day in retail sales. But then we also do get housing numbers along with jobless claims towards the end of the week. Now, the 10-year bond's hovering at about 4.19 today. It's in a pretty big trading range. So we're really anxious to see what we get next week and then the week after that with that big PCE report. Hold on. We got these better rates. Let's take advantage of them this weekend. Give us a call. We'll help you get your offers accepted, get you pre-approved. 616-293-2189. Hope you have an awesome weekend.